Stock list, we're back with a banger.
That's it. You heard petrol prices are rising, and most of you don't know why. You just know that you're paying for something and it's just above your budget.
Some of us are going to the petrol station. We're seeing £1.60. £1.60.
Aye.
How? Anyway, we're about to get into one of the petrol conglomerates or the petrol corporations. Yeah, the big oil firms.
That's it. You know, when you're using a serious word,
yeah,
you know that we're gonna be talking about
conglomerate.
You know we're gonna be talking about a big business.
That's it, man. So today, what company are you talking about?
So we're talking about ExxonMobile. Do you wanna say what ExxonMobile is?
Yeah. So Exxon is Mobil.
Oh, okay.
Mobil, sorry, I already butchered it.
We wrote Mobil, but ExxonMobile. Basically, they're an American multinational oil and gas corporation with headquarters in Texas.
Okay.
That's mainly what they are. So they produce, they dig oil. The ticker on the stock market is XOM, so ExxonMobile. And yeah, we'll get into the price.
So current price is $88. They currently trade on the New York Stock Exchange, not the Nasdaq. The New York Stock Exchange, and their 52-week range is between $52 and $91. So we've already said they're currently at $88, so it's a bit too high at the moment. In terms of their operations, where they run things,
where they're digging the oil, they mainly operate in South America, Argentina. In Asia, they operate in China, Hong Kong, India, so many different countries, Pakistan. Papua New Guinea, Singapore, South Korea.
Papua New Guinea.
Wow. Papua New Guinea,
when they say they're multinational, they really meant it.
Out everywhere, bro. Obviously, the main place that they don't operate in is Russia, and we're gonna elaborate on why we mentioned Russia.
That's it.
Yeah, so we'll get into that.
Cool. Before we dive into the juicy thing, the pros and the cons, we're gonna give you a quick disclaimer to let you know that we're not financial advisors. Take everything we say with a pinch of salt,
Maggi,
paprika,
and anything in the kitchen.
That's it.
Even Indomie.
Certain man had Indomie today, so it's on their mind.
That's it, fam.
Alright, cool.
So let's go straight into the first pro, Mike.
So pro number one is the fact that because of the ongoing war in Russia, between Russia and Ukraine, there's been some sanctions, which means that this company have decided not to operate in Russia. It benefits them in the sense that their costs don't go up because they are still operating elsewhere, still able to get their oil from wherever. Their costs are not rising, but the price, because of the lack of supply of oil at the moment, and there's been an increase in prices, which is going to benefit them in terms of profits. Simple as that. So, for example, when you go to a petrol station right now, you see that oil prices, or petrol and diesel prices, which ultimately is oil, has gone up. If their costs ain't gone up too, they're gonna make more money.
Just making profit for no reason, bro. Literally, just because there's been a cut of supply in the market.
That's it.
So obviously demand is still the same.
That's it.
Price goes up.
That's it.
Make more drinks.
That's it.
It's that simple. All right. So point number two is the fact that oil is not going away anytime soon. According to the source Worldometer, there's still 47 years worth of oil left to dig.
Wow.
47 years.
Wow.
So we're going to be old before oil runs out, bro. I'm not going to lie. I'm not going to reveal our age, but we're going to be very old before oil runs out. So that's like one reason why, it's safe to invest. It's kind of safe to invest in the oil stock. Oil's not going away. And the fact that oil is used for so much things that we don't even know about. Like, did you know plastics come from oil? Obviously, fuel comes from oil. So many different things. Oil, digging for oil reveals methane, which is used as gas for cooking, that kind of stuff. So we get a lot from digging for oil.
Man, therefore paid attention in GCSE science.
In science, bro. I was on it. Yeah, man.
Man is talking about methane and all sorts.
All these things, bro.
Wow.
So yeah, the whole point is there's a lot of use for crude oil. That's why it's such a valuable commodity. It's not going away anytime soon as well. Do you get it?
Yeah. Even if you think about the fact that oil always, in terms of the stock market, there's always cycles where there's peak periods because of the demand. Like, for example, I touched on like petrol and diesel prices.
Yeah.
there's periods where there's high demand, there's periods where there's low demand. For other things as well, like other things that obviously, like you touched on, plastics and like so many things that comes from oil. There's always periods where there's demand for it. So having some sort of company that's associated with oil in your portfolio is not a bad idea because there's always cycles.
Yeah. ExxonMobil specifically have been investing in ways to, save the environment. And one of the main methods they've invested in is something called carbon capture. And
So
that
what's that?
is when, so it's going to be a bit of a technical explanation,
Nah,
but
go
I'll
on,
keep
go
it
on,
as
go on,
simple as
because
possible.
people might be thinking carbon capture is
Carbon
it
capture.
like a screenshot or something like is it a photo? Is it what is it?
So basically, it's basically just a process or a machine which sucks the carbon from the air, and then it can be recycled into different things. So I don't know if you know, but when we use fossil fuels, when we use petrol, it releases carbon into the air.
Right,
That
so
carbon,
layman terms now, they don't want to waste the byproducts, so they're just trapping it in.
they're basically sucking it back in.
Yeah.
And that byproducts can be used for many things. It can be used to generate more power. It can be used to create fuel again. It can be used to enrich concrete to make it stronger. It does so much different things. It can even be used as plastics. You know what I'm saying, to create products. And then finally, obviously, investing in carbon capture creates new jobs.
Of course.
So there's so much that's being done here.
Yeah.
So that's actually a very good pro for this company, and it looks good. It looks good on them as well. They're saving the environment in their own weird way.
It's true.
Do you know what I'm saying? So those are the pros. That's why you'd want to look into a oil stock.
On this show we're not biased, so what we're gonna do is make sure you know about the cons. But before we get into the cons, you need to know about the financials.
Let's go.
The bit that you lot find boring, but is very important.
Extremely.
So, in terms of their revenue, at the moment, it's up from in 2020 it was 178 billion, and in 2021 it was 280 billion. So obviously you see the increase, 178, 280. Doesn't take Einstein
Genius.
to realize that revenues sales have increased.
Clearly.
When it comes to their net income, which is everything after expenses, everything have been taken away. We can see that in 2020, they were operating at a loss. They didn't make money.
Oh wow.
Yeah,
So
they were
red.
minus 22 billion.
Wow.
But we can say COVID had an impact because everyone was in their houses. People weren't really using oil like that for certain things.
Whole market was
Just
just
the whole,
disrupted, man.
everything,
Just
Cool.
disrupted.
However, they bounced back in 2021 to take home 23 billion.
Wow. Big jump.
So a big jump.
That's about 200% increase.
What I can say is that even though when you look at previous years, there hasn't been like consistent pattern in terms of how much net income they've taken, they have always
It's always
been positive.
fluctuated.
Yeah.
Okay.
Like in 2017? In 2017, they brought home 19 billion. 2018, 20 billion. 2019, 14 billion. Obviously, 2020 is when they went in the reds, and now 23 billion. There isn't a pattern, but they've always been positive.
Yeah.
So it is good in a way, but we would love to see some consistency in terms of their how much they're bringing in, taking in after everything has been deducted, especially as they're bringing such a high amount of sales in.
Yeah, of course.
Yeah.
Of course.
In terms of how much cash they got in the bank at the moment, they've got 6 billion on hand.
6.8, yeah.
So if they had an issue at the moment, like if all their creditors said, we need our money back,
They would only be able to cover 6.8 billion worth of debts.
that's it. That's it. The problem is now that when you think about in terms of their long-term debt is 47 billion.
Wow.
So
That's a big gap.
there's a big
They
gap
still
in
need
terms
to find
of
40 billion to
Exactly.
cover their...
where what's saving them is the fact that in terms of their assets, they do have quite a bit of assets, but it's not easy to convert your assets into cash.
It's not very liquid.
It's not liquid at all. They've got, in terms of their current assets, they've got 59 billion. Obviously, that's enough to pay off their long-term debt plus the cash they have on hand. But it's the fact that
How quickly can you come across that money?
Exactly. So yeah, you can see that overall, it doesn't seem like a business that is gonna go away anytime soon because
Definitely not.
in terms of the assets and how much they've got in the bank, they're good in that sense. But they could be operating in a better way. They need to find ways to minimize their expenditure,
Yep.
and they'll be good.
Yeah. Simple.
Yeah.
On that note, we're going to go into the cons so we can tell you about what they're doing not so right. So the last pro we spoke about was the fact that ExxonMobil is looking heavily into carbon capture methods, right?
Yep.
That can also be seen as a con because when you actually look at it and you look deeper, you realize that carbon capture isn't what's going to save humanity. That's not what's going to, be the ultimate environmental savings grace, basically. The only way to really, look after the environment is to stop using
Fossil fuels.
fossil fuels.
Yep.
Yeah. And the best way to do that is to actually invest in renewable energy sources, wind farming, solar energy. What's the other ones? There's loads of different ways,
Yeah. Yeah.
right? And they've actually not really looked into investing into renewable energy sources. They're only investing in carbon capture.
Yep.
And we see that as a con because in years to come, the companies who are investing in renewable energy are the companies that are going to be making money from selling energy. Common sense.
Yeah.
So why are you not investing in that?
Yeah.
So to me, that's a major con. I just don't understand it personally. Yeah.
Point number 2, which is con number 2, is the fact that a lot of countries are now pushing people to be more, think about the decisions they're making. Norway has become one of the first countries in the world to have people buy more electric cars than petrol and diesel cars, which is massive because you can see the shift from oil to renewable energy.
Yep. Simple. One thing I'll add to that is like it's not just countries, even companies are really like trying to watch their carbon footprint and all this stuff. You know what I'm saying? Everyone's trying to be conscious of saving the environment and using less fossil fuels. So if that's the trend, everyone's like trying to invest in renewable sources, and you're there still selling fossil fuels. Is that really a good look? Does that really make sense? You're going against the grain. Doesn't make sense to me. So the third con for investing in ExxonMobil stock is the fact that oil companies just get negative press all the time. Like, think of the last time you heard about an oil company in the news. Was it something positive? Probably wasn't, bro. Probably wasn't. And then you get things like oil spills, which really messes up these companies. Like, if you look at BP, BP had a big issue a couple years ago when they had a massive oil spill that happened again like a few years before that. So investing in oil stocks is very risky because you never know when the bad press is going to come, and it's just not really seen as a positive thing in general. So,
and the way the media covered the bad press, it really
mad.
hits the stock.
Like, it really hits the stock. Yeah, definitely hits the stock. So that's something to be very mindful of.
And the final point is the fact that the bubble could burst in terms of oil and gas stocks. Reason being is because at the moment, most of them are all-time. Oil prices are at a all-time high at the moment. What goes up must come down. It's simple.
It's that simple. I would definitely say there's a bubble in terms of the price. Because aside from the Russia thing, there's nothing else that we can think of that's fueling this price surge.
Of oil.
You know what I'm saying?
Like everything.
And this war's gonna stop as well at some point. It's gonna end. So what happens then? It's gonna be very interesting. So based on that, you need to be careful when you're invested in an oil stock.
That's it. That's our opinions. Drop a comment below and let us know whether or not you're holding on to any oil, gas, or renewable energy stocks. And
we want to know because we want to discuss a renewable energy stock soon.
That's it.
So we want to know.
That's it. Final point. Again, we're not financial advisors. And make sure you like, comment, subscribe.
Thank you.